On Trading Nation, let's take a look at the broader market because while the S&P has recouped most of its post-correction losses, still about half its components stuck at a correction. Plus, the S&P on track to break its record 15-month-long winning streak. Let's bring in the Trading Nation team for some names maybe you want to buy at these levels. Matt Maley, Miller Tabak, Mark Tepper, Strategic Wealth Partners. Mark, why do you think Lowe's is going to go higher?
Yeah, I mean, it's kind of contrarian given their earnings release today. But, you know, we're really big on the infrastructure theme. We're big on, you know, the entire housing theme right now. So, you know, within the infrastructure theme, we like Lowe's. You know, pending home sales fell 4.7% last month, but not because of lack of demand, but rather for lack of inventory. And that slack should boost real estate construction, home improvement, and like related sectors. So yes, 2018 earnings per share guidance was below analyst expectations for Lowe's, but it's still far above last year. And you combine strong same-store sales, an expected home improvement boom due to the low housing inventory, and at this valuation, Lowe's is a nice value play.
And also because you're in Cleveland, you're going with the Homer call, KeyBank?
Yeah, well, you know, Warren Buffett says you should invest in what you know. So obviously we know a little bit more about KeyBank than some of the other regional banks. But overall, we love the regional banks. You know, rising rates are going to lead to a higher net interest margin, which, you know, they've had a lot of pressure on those over the last several years. And that's going to increase earnings. Small business optimism is through the roof, so commercial and industrial loans should pick up. And then, you know, consumer confidence is strong, balance sheets are strong, and credit quality improvement has become a significant growth catalyst for Key. And with a forward PE of 12, you know, that's an easy buy for us.
Okay, Matt Maley, what makes Chevron attractive to you and Miller Tabak?
Well, a couple things. First of all, oil prices remain elevated. They came down a little bit today, but they've got dipped below $60 for just a New York minute, and then bounced back. And the thing is, we have, whether it be OPEC holding the line on the production cuts that nobody thought would take place. Of course, we got the Saudis still have the Aramco deal coming up, and they might not have the same influence they used to, but they still got plenty, and they want the oil prices to stay up. And plus, you know, on this side of the pond, we got capital. People are more concerned about how much money their capital returns rather than just capital spending. So I don't think we're going to get that drill situation we've had for a long time. But more specifically to Chevron, I mean, the stock is way down compared to the underlying commodity, and it made a nice little double bottom here at just below $110, and it's bounced back. Now the bounce back hasn't been as strong as it has been in oil, but if you look at the chart, it's been very highly correlated. Suddenly there's a big divergence. So as long as oil holds up, and as I said, I think it will, the divergence should be justified by a nice rally going up in Chevron.
Yeah, and McDonald's, I was going to say speaking of oil, but that wouldn't be fair to McDonald's, which has cleaned up its menu greatly in the recent years. Why is McDonald's also looking pretty good?
Well, it's a little bit tougher name, and initially when you look at the chart, it doesn't look all that good because its bounce has been very feeble off this kind of mini crash low. But that's a little misleading because we have to look. You look where this rally started. You know, we talk about the 2017 rally, but it really started at the election in 2016, and the rally was over 60% versus a 38% rally in the S&P. So it's almost doubled the performance of the S&P over that time frame. Not only that, its monthly RSI chart got more overbought than it has been since 1986. So it's ridiculously overbought. So the fact that it hasn't been able to bounce back as much isn't as big a concern as it may be for some other stocks because it's still trying to work off that overbought condition. But you know, the fact that it's doing that while it's riding its 200-day moving average is very good on a technical basis. So if this stock can get finally pull away from that 200-day moving average after having worked off this overbought condition, it's going to be quite positive for the stock. So I like Chevron better, but McDonald's could be a compelling one too.
All right, some picks there. Chevron, McDonald's, KeyBank, and Lowe's. Guys, we really appreciate it. Thank you for joining us here on Trading Nation. As always, folks, thank you. We'll see you next time. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.